Sophie, welcome. I was hoping to sit a little closer to you, but not today. That's okay. Drinks afterwards. So with that, just wanted to kind of help set the stage. You're with EVPA. You're familiar with a lot of these terms that we'll be discussing today. Help the audience understand, what is patient capital, catalytic capital? What's the overall value chain of blended finance? And where does EVPA sit in that value chain?
Good morning, everybody. Thank you, Leah, and thank you, ChangeNOW, for having EVPA, sharing our experience on blended finance and catalytic capital. So indeed, EVPA is this European network of investors for impact, about 300 organizations, family foundation, impact funds, and corporate financial institutions. And actually, indeed, the role of EVPA is really to break the silo among those investors. And the reason I'm mentioning that is because it's directly related to blended finance catalytic capital, and I come to that in a minute. So we're breaking silo. We are an ecosystem builder, and we want to make sure that all those organizations, diverse profile of organization, from philanthropic, impact investing, mainstream, the catalytic capital is really a red thread to make sure they all mobilize resources and onboard new actors in their financing. So we actually, it's catalytic capital resonates very much with the majority of our membership base, and we, together with Catalytic Capital Consortium, C3, behind you have MacArthur Foundation, Rockefeller Foundation, and Omidyar Network, they decided really to make a big push to nudge, to make sure we increase the use of catalytic capital. And the catalytic capital, 1 second on the definition, it's really capital which is deployed with a higher level of risk and slightly lower level of financial return than other actors can take. And most importantly, also, from inception, from the start, those investors adopting this approach of catalytic capital, they are intentionally willing to onboard some investors that could not have been financing the structure. And so with C3, with the global sister organization in Africa, Asia, and Latin America, we launched a consultation last year, and we're going to have a white paper with the key learnings and the knowledge and case study and all this in June, July. We launched a consultation to really push forward this practice because it's massively needed in the ecosystem.
Okay, thank you. You touched upon C3. Convergence has been part of that initiative, and could you just dive a little bit more into that as an example for the audience, and certainly as an ecosystem builder?
Exactly. So just a minute, and I will illustrate with 3 examples. Just a minute on why it is so crucial. It's so crucial for 2 main reasons. 3, I would say. 1, you may be familiar with this number, those metrics. Impact investing, yes, hooray, $1 trillion plus dollar. So really high record, but it's still annually very low compared to the $4.5 billion gap that we need to, the ecosystem needs to finance. Second reason, impact starts with catalytic capital. Really, because those social organizations are providing the solutions to the most pressing need, housing, education, food, and so on. Those social organizations need time for the proof of concept, to understand the stakeholders' needs, to put in place impact measurement and management process. So you need flexible, patient, long-term capital with investors that are going to develop partnership, trust with the social organization. Second reason, additionality. Those catalytic capital, the big feature is additionality on 2 ways. 1, as I said, they bring on board third-party investors that would not have come along, invest along, without those impact funders. And second, the non-financial support, technical assistance are key to mitigate risk. And the example, maybe?
Example, and then also discussion around knowledge building. We discussed that, yeah.
Yeah. So, and knowledge building is very much linked, I think, to the barriers that through this work, through this consultation, we identified. We identified three barriers, challenges, and we're working on it. I come to that in a minute. So, 2 minutes. Maybe the example for the audience. So, I give one example out of Belgium, a large Belgium impact fund company. They decided to address the smallholder farmers' agriculture issues in sub-Saharan Africa. And actually, the Belgium government, they were able to have a grant from a first loss absorption grant and from Belgium government. And through this, they were able to double the size of the fund, triple the number of beneficiaries, smallholder farmers. A second example is MasterCard Foundation African Growth Fund, beginning of last year, that was launched together with IMP, Investisseurs Partenaires, a leading European impact investing fund in Africa. And it's a fund of funds, $200 million, to address the job inclusion of young women in Africa. 30 million young women by 2030 should be onboarded, so should get access to jobs. So that would not have been possible without the philanthropic money that MasterCard Foundation brought upon. And of course, they were able to onboard a consortium of regional African public and private capital, and that this is really completely catalytic capital and really blended finance, because you see the key role, instrumental role of this public money. And very quickly, and it's a fund of funds which mitigates risk, de-risk the structure as well. Scaling, diversification of portfolio, I'm sure my colleagues, Yasmin and Christina will go through that. And very quickly, the role of corporates. And I want to mention this example of Royal Philips, who developed a $100 million in healthcare, because in sub-Saharan Africa, affordability of medicine is a key issue. Commercial funders found it too risky, they can crack it. Impact funders, too vertical, no holistic approach. And so the Royal Philips put together with a Health Coalition Fund and Africa Invest, a pool of capital, de-risking the structure, and they were really able to crack 100 million beneficiaries access to medicine.
Thank you so much, Sophie, for those examples. We're unfortunately at time. It went by fast. I appreciate all that you're doing and EVPA is doing. I'd also like to invite Celia and James to the stage once we hear the jingle. But in the meantime, please find Sophie afterwards and grab her if you have more questions about EVPA and the fantastic work they're doing. Thank you so much.
Thank you.
Appreciate it.
Thank you.
So we'd love to, I think, at the jingle, welcome Celia and James to the stage. So Sophie's a good friend, so I'm giving the stage to her. She has one more thing to say.
I just want to say that we're going to have this white paper out with guidance, case study, and so on. And there is a real call to action. In Torino during EVPA annual conference in November, we're going to have many sessions on this with real call to action, coalition of actors coming in EVPA Impact Week Torino. This is our annual conference, so please join us. Stay tuned on LinkedIn and social media. Thank you very much.
Now I have to steal the mic, so I'll pass it to James. Thank you so much, Sophie.